Good morning. This is the Innovation Conversation. How you doing, Tom?
Good, Kevin. How are you?
Not too bad, not too bad.
Nice.
So, I wanted to talk to you a little bit to sort of get your impressions of the two-part interview ran earlier this week with Chieh Huang, the CEO, co-founder of Boxed. I found him fascinating and remarkably candid, and I mean, I don't know that I've ever met him, but I really liked him. He just struck me as a good guy with a clear vision, albeit a vision of a road that has its own share of landmines.
Yeah, I've never met Chieh either, and I almost met him this last Saturday night at a dinner at FMI. He was at the same dinner as me, and by the time I was able to get over to meet him, he'd already gone on to something else. But I've always been very impressed with him. I always find him to be incredibly engaging, insightful, candid, really good, as he was in your interview. I think it was good. I love the range of topics that you covered, from kind of what did you learn along the way and how things have changed in the 10 years, to the types of challenges they're facing today. I loved when you were referring to him as a bargain. He was a little uncomfortable considering himself a bargain. Nowadays, with the way the markets are, he is. I mean, that is.
His
It's
point
a lot less expensive.
Yeah, if you look at me this way, I'm a bargain. But if you look at this way, this is a really good time. I'm a great
time to get in.
Right.
Absolutely, no doubt about it. And then you guys, talked about, I think you called it the North Star, the true north. Where retailers, are looking to head as far as actually being that solution for customers. Anytime, anywhere, anyhow. They want to make a purchase or have needs fulfilled. I just thought it was a really good range of topics that you covered, and appreciated his candor. And I've always rooted for Boxed. And I will continue to root for Boxed. Coming out of the business, coming out of Amazon, always felt like they had a pretty clear approach to the opportunity, and had some real upside there.
It was interesting. Subsequently, I mean, we talked a lot about, who might buy them, right? Or who might invest in them, and how that might they take shape. Obviously, he doesn't know how that's going to shake out yet, or at least is unable to share it. And since then, as we reported, they got basically $10 million in financing. That sort of gives them some breathing room. It's sort of like a bridge loan, right? Not a loan, yeah. Bridge financing to help them get to the point where they need to be. I mean, it was fascinating. I went back, and I know you'll remember this, but back October 16th, 2017, we actually did a podcast together. It was an innovation conversation podcast. It was part of the whole Retail Tomorrow GMDC initiative. And we had on as our guest, Jackson Janayagam, who was at the time their CMO. He had just left Chipotle. And then he was working for Boxed, and I don't know where he is now. But
I think he's at Clorox doing DTC for Clorox.
Okay. Yeah, and it was fascinating. And one of the things, as I was going back to listen to that, I had to go through the Morning Newsbeat archives, and I looked in 2018. There was a story that basically, and this was a Bloomberg story, I think, that Kroger was offering $400 million to buy Boxed, and Boxed turned them down. And I didn't know this. I didn't remember this when I talked to Chieh. I wish I'd known. And that Amazon had indicated some interest in 2018. Now, I don't know if Boxed ever confirmed those, but those are the stories that Bloomberg was reporting, and Bloomberg's a pretty reputable organization.
Well, he's probably glad he didn't bring it up. I don't think he would have needed to hear that, given the market that he's in, and we're all in today. Anybody trying to raise money for businesses that require capital, it's a tough time. They're public now, so you can certainly see what they're valued by going on, any financial website and looking them up. It's pretty far short of $400 million.
Yeah, it was interesting in listening to the podcast. There were a couple of things that you actually observed at the time, which I thought were interesting. One was, you thought they were going to have to be acquired by somebody. I mean, you come out and pretty much say, I don't think these guys can survive on their own, not long term. Okay. Yeah. And the other one was, it was interesting. You made a reference to the fact that they were positioning themselves to compete with the and do a better job than the Prime pantry box that Amazon had at the time, which doesn't exist anymore.
Right.
Which may teach us some lessons about what Boxed is trying to do and not do.
Yeah, I mean, I think that, they have a very clear positioning, right? That they want to position themselves as, the online club-like pantry stock-up location. And, I think that clear positioning, makes sense for customers. Standing on its own, it does make sense. I think my question for them long term is, can you scale that thing to the level, where it is self-sustaining, throwing off enough margin and return, right? And as you get bigger and you open more facilities, can you get your cost structure such? Can you get your scale such that you can get, reasonably costed products? He talks about being on the podium, when it comes to being the low priced or a lower priced option. And when you're competing against the scale of Amazon, Walmart, Costco, just to start, you have to just be so much larger than they are that it can be hard to compete, at a sustainable level, cost-wise. So I think that's where I was really coming from, as far as, I actually was thinking they would be a pretty darn interesting acquisition opportunity for even any of those three companies that I just mentioned, or a wholesaler, or the like. I never was a believer in Prime Pantry as a valuable, helpful consumer offering. It just never really quite fit into Amazon's model. It had like smaller, more consumer-like pack sizes you would find, in your local store, which is nice because Amazon tends to need larger pack sizes to be able to support the economics of shipping single units. But it was always just an awkward experience having to fill your box, on that periodic basis to get to that, that required level of value. It just never felt like a good, customer experience. Like customers would seek it out and it would really solve needs for them. It seemed like it was built to help Amazon with profitability more than it was, to help their customers solve problems. And so I wasn't surprised to see Prime Pantry probably went away not long after that podcast.
Yeah.
And I do think that Box has, very reasonable, has a reasonably positive, long-term outlook for success, the way it's positioned.
Yeah, I mean, it's interesting, both in terms of what Chieh said and also what you just said. It seems to me, there's three potential acquirers, right? I mean, you could go venture capital, right? You could go retailer, or you could go wholesaler. And listen, we'll find out how prescient I am. But it seems to me that, I mean, venture capital might have money, but there's no strategic advantage in that.
And venture capital has to take you somewhere.
Right.
Right. Venture capital comes in, it has to take you to, from valuation A to valuation 5 to 10A. Right. Right. And then get you sold either off to PE, acquisition, or go public at that point. And, they're already public.
Right.
So probably VC/PE at this point doesn't seem to make a lot of sense, but, I don't know. I mean, it could, if you look at the model and look what they want to do, it might, but it feels like strategic acquisition is probably more likely.
And I don't know, when I look at it, and again, I could be wrong, but it's hard for me to figure who the retailer is. I mean, Amazon doesn't seem to be acquiring anything right now. Maybe Walmart. Walmart doesn't buy stuff like very often. I mean, they do, but not.
Look, yeah.
But it's hard to imagine Kroger or Albertsons doing it. It's hard to imagine Dele's, Dele's doing it. So it's interesting. So I tend to think, well, it could be a really interesting acquisition for a wholesaler who could then take the Boxed model and help independent and regional retailers, give them a real advantage maybe that they don't have right now in terms of being able to tap into an entirely different marketplace.
Yeah, I mean, I could see definitely a wholesaler doing it, in the wholesaler with their retailer relationships, and then these products being marketed on the retailer's e-commerce sites,
Right.
right? In a in a way that makes sense to the customer. Entry load, my club like purchase occasion, where I can load up that box, have it picked and packed and delivered from a facility, and then having some kind of retailer branding. It'd be hard to brand all the individual retailers' boxes differently,
Right.
but you could probably via the label, as it's coming off the line, you could probably give it enough retailer recognition or branding that the retailer would get the credit for that.
Yeah, and and maybe they keep the box name. I mean, maybe they keep it boxed so there allows them to go into other markets, or it's boxed by
Yeah,
XYZ or what. I mean, there's different ways. There's a lot of ways to skin that cat.
yeah,
Uh, um, but one of the things that, I mean, it occurred to me though, and again in the conversation and what we're talking about now, is the more I think about it, the more I think that one of the reasons it would be helpful to a wholesaler and retailer is it would help them connect the dots in a way that almost nobody is doing effectively.
yeah,
In the sense that, right, even Amazon, and I mean, it again, and I've used this example before. I go to Whole Foods. There's absolutely no recognition in any way, shape, or form that I've been an Amazon customer since 1996. I go on Amazon. There's no recognition of the idea that I have a Whole Foods a half a mile from me that I walk to and go into 3 or 4 times a week and only make small purchases, which would suggest that maybe I'm fertile ground to try to get me to have a bigger basket. But there's no connection there. Nobody's connecting the dots in a really effective way. Amazon probably has the most weapons to do it, but even they're not doing it.
yeah. I would say that they certainly they're the best positioned to do so because of the amount of data that they have, on you, and to support you, and the various, they have most of the retail channels covered, right? Between traditional ecom, local ecom delivery or pickup, and traditional store. So they do have a good range of those. Other retailers, I would argue that most retailers also don't properly recognize you and your loyalty when
Oh, I
you're
would agree.
shopping them. I know you would agree with me.
Oh no, totally agree.
I mean, but I do see in my work, retailers are getting closer. They're getting better. They all have some level of aspiration to connect their e-com and in-store experiences and to be able to recognize you across those, right? Like I can auto replen a product, through e-com, but when I go into the store and I buy it off the shelf, I actually get a little extra discount because I have that on auto replen,
Right.
right? And it's a thank you for that, and you get just that recognition that that you do recognize me across those things, or I do things in store, and then based on what I'm doing in store, I get offered, either special deals or something that I buy regularly in store. I can put it on auto replenishment, through ecom, and start to think back and forth. So there are some retailers that are thinking about at least connecting some of the dots, but a lot of retailers just don't have that many dots to connect, right?
Right.
Like if you're a traditional grocer, you have the store grocery experience generally, and you have the ecom grocery experience generally. You probably don't have a club-like experience unless you build something like that into your marketplace. You have an on-demand delivery experience, often done through a third party, right? Like a DoorDash or an Uber or an Instacart. There is a real opportunity to connect these. Amazon probably should have the lead, but I think we're seeing that while they have the data on you, it still is fairly unconnected. And in a way, maybe that's comforting to a consumer because they're keeping the data secure within each of the buckets that it's in. But as a customer, you'd probably rather be recognized and get some additional value out of that, I would think.
Well, I'd certainly be willing to give them permission. I mean, and again, I mean, as long as they're telling me
Yeah,
where, how, and where, and when the information is being shared, and what the benefit is to me.
yeah,
Um, I think that's, that could be really powerful. And it was, somebody was saying to me the other day that, there's that if there's got to be, I mean, if retailers don't start to embrace these kinds of technologies, technology companies are going to come in and probably disrupt the grocery industry to a greater degree than they have. Now, I think we're in a weird moment, right, where technology companies aren't doing anything. But this moment, yeah, right. But that's not going to last forever. This is right. I mean, this is going to change, and I guess in a larger sense, if retailers and their wholesalers don't figure out how to connect the dots in an effective way, somebody's going to come in who does. I mean, whoever does that is going to have an enormous first mover advantage. And it's not even a first mover advantage in the sense that all these dots have existed for a long time.
Right. You wonder though, like, yeah, who is that third party tech company that can have that connection to the customer and then utilize the assets and capabilities of the retailer to serve that customer and ultimately get a disproportionate share of the benefit, right? The nearest term classic example is what Instacart has been doing.
I was going to say, yeah, I was going to say Instacart is because the more you talk to them, the phrase you keep hearing from them is connected stores, right? That they're more trying to connect the in-store experience to the e-commerce experience, understanding that their fortunes are not tied just to, being a service provider, that they've got to provide something bigger and more profound. So I think in some ways, Instacart gets it. The question is the degree to which the industry is going to pick up on what Instacart is trying to do and embrace the opportunity as opposed to just saying, oh, no, we just want to do e-commerce because that's what we do.
Yeah, no, I mean, I think you're right. I mean, the retailers have to, they know this, but they have to enable that connectivity across the experiences. And if a partner like Instacart can help them do that and the retailer can maintain the relationship and ownership. I hate saying ownership, but can maintain that relationship with the customer, then that's great. Because retailers aren't going to be able to build all this technology on their own. So they have to, we know they have to partner with technologists. And as long as they can really keep that focus on their customers, determining what they want to be for their customers and how they leverage their range of capabilities and assets to serve that. And then technology is the enabler of that. I think those retailers are going to be fine, but they got to get moving. They absolutely have to get moving.
Yeah. Although I do think, and again, I don't know if it's a window of opportunity or not, but it was interesting to see the story this week about Amazon introducing this prescription subscription idea, right? Which on the face of it sounds like a really good idea, but in a lot of ways, I have to say when I read the story and then I commented on the story, I couldn't help but feel that if this story had come up 3 years ago, I would have said, oh man, this is going to change the world. This is going to, this is going to be unbelievable. And now I have to say I've become cynical because, I mean, PillPack, has that mattered really? I mean, I don't know. I mean, maybe has that grown since Amazon bought it? I'm not aware of that. Their ability to deliver on some of the promises they're making I think has been diminished. And maybe it was never up to what the PR was anyway. So I do think that there's a moment here where retailers who want to be ambitious about again, to use the phrase connecting the dots, are this is a good time probably because Amazon is not, maybe, I hate to say it because they're not going to announce something tomorrow and it'll knock my socks off, right? But they don't seem at the moment like the juggernaut and the invincible juggernaut that they seemed like a few years ago, which is not to say they won't be again, and they might be tomorrow. But at this moment, as I'm talking to you, they seem a little bit tentative. They don't seem as surefire a bet as they did a few years ago.
Yeah, I can see that. I know from being inside there, and we've talked about this too. When you were when you weren't doing as many things out in the public, right, you could allow time for something to grow. And you can announce something like subscribe and save, We announced Subscribe and Save in 2007, I think it was. That first, it was, it made a lot of news and whatnot. It seemed cool. There's some commercials and stuff for it, but man, if you saw the volume of Subscribe and Save in the first year, like, what is this? Like, it was so, initially it was just so lightly adopted, right? Initially, when it was something new. But then, as it gets going, right, and you saw in year 2, it became, like, wow, this is really interesting. And then by like year 4, it was the majority of the CPG sales.
Right.
So there are these things that take a while inside Amazon that, and I guess in the past when there wasn't as much direct competition in that stuff too, you were able to kind of be patient inside Amazon doing that. And now, many more bets they're making widely and publicly. And they have to be making more bets just given their size. And yeah, we're probably seeing, fewer of them relative to the total flourishing and taking off. And the whole prescription healthcare segment is very difficult. They've shown that they haven't mastered it, but they've certainly shown that they have a big appetite for it. So yeah, I don't know. I don't know how well Amazon Pharmacy is doing in general. They've had PillPack for a while. Really don't know how that scaled in the last, handful of years since they've had it. But it's a pretty interesting program. I think it's incomplete, as you had mentioned. It's a pretty finite set of maintenance drugs. You'd like to maybe expand that a little bit more. And then Medicare, Medicaid not included. There's probably reasons obviously there's reasons for that. You hope there are reasons that they can overcome eventually to make it more complete. But yeah, you shouldn't be like, when Amazon does something in a space, be like, oh, it's game over. But
Right.
if you remember way back when, people just discounted Amazon to say, oh, it's Amazon, they're different, they're not going to matter. And then all of a sudden, Amazon's got an $80 billion CPG business that has like a real market share. So, watch them, learn from them, but chart your own course for your own customers. It's the way to go.
Yeah. It's interesting when you talk about the pharmacy business, it's very, I'd be hard pressed to tell you when the last time was. And again, I'm a good Amazon customer, and I've been a shopper since 96, 97, right? So I've been shopping on Amazon a long time. God knows what they know, the data they have on me. But they never try and sell me their prescription business. They've never tried to move me over from whatever I'm on now. So they don't. It's like they do these things, but they're not aggressive in how they market them. It's like they're leaving it.
No, I agree. Yeah, I remember seeing, getting the Amazon Pharmacy emails,
right,
and saying, "Look how easy it is."
right.
But
no follow up. No,
you're right. Very little follow up, and but that is, Amazon has always prided itself on inbox management,
right,
and keeping the number of offers you get throttled, based on a few different criteria. I actually feel like there's a fair number of Amazon emails that do come in these days, so they certainly could focus on it a little bit more. It would seem like, and get away with it.
Well,
and probably get some benefit.
And you bring up Subscribe and Save. I'm watching football last weekend, and there's a commercial for Subscribe and Save.
Been all over the NFL playoffs this year.
But it's the same damn commercial that they've been running for 2 years about the
It
woman
was from 2 years ago. Yeah, they didn't do a new one.
It's
agree.
like,
yeah.
Run a new commercial, could you? You got some money.
Yeah.
Well, invest in
money
some
these
new
days.
creative. Because now you look at it and you go, I've seen this commercial, I'll go get something to eat.
Totally.
So
yeah, I agree.
okay.
I still like the commercial because it's always fun to see something you built.
That's right.
So it's gratifying, but I agree. They do need some commercials. If you YouTube search for Subscribe and Save commercials, there are a bunch of kind of funny old ones though. People running out of coffee, a dad with a baby on a changing table, reaching for the diaper, it's not there, and the baby releases all over his shirt.
I would watch over and over. Maybe it's time to bring this back. Hey, listen.
Right? Why not?
Yeah, absolutely. Good oldies but goodies. That's what. And the older I get, the more I use that phrase.
There you go.
Hey, listen. As always, thanks. Appreciate it. We'll talk in 2 weeks.
Love it. Look forward to it.
Sounds good. Take care,
Thanks,
everybody.
Kevin. See everyone.